What's up, people? Welcome or welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this has been another down week in the stock market. Generally speaking, Neo is down. It's worth noting that this was a shorter trading week. Now, I did briefly touch on this last week as a watch out. Though Walmart and Home Depot had decent earning results, they both provided weak forward guidance. The relevance here is that it speaks to a potentially weaker consumer and therefore a slowing economy. About 70% of the US economy is based on consumer spending. So if the consumer slows down, recession concerns rise, right? So add to that the hotter than expected PCE number. It's another metric for inflation. And you can see why stocks turned lower this week. That's the current macro picture. Neo came into the week already pressured. It held on steady for most of it, but ultimately was dragged down with the rest of the market on the PCE news. Neo closed down 8.73%. So in today's video, I'll go over what is pressuring Neo specifically ahead of the earning call next week, then take a quick look at the technicals and price prediction to see if we can get a sense of where we're heading next. And I'll close with how I'm approaching the stock with the few big events happening next week that I will be paying attention to. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so next week on Wednesday, March 1st, Neo is set to report on its Q4 2022 performance and full year earning results. The primary concerns at this point stems from the fact that we already know that the delivery numbers in Q4 2022 were lower than expected. Neo delivered a total of 40,052 vehicles in the fourth quarter. This is below its initial guidance range of 43,000 to 48,000, but above the revised lowered guidance of 38,500 to 39,500 vehicles. Based on these numbers, Neo is largely expected to miss on revenue and see profit margin compression as a result. Now, the 2022 performance is only part of the concerns for investors and portfolio managers. As I covered in my last video, we know that the January numbers were down 46% compared to December. Yes, the holidays played a part in that, but when you add the fact that as of January 1st, 2023, the Chinese government has ended all vehicle EVs subsidies, it does raise the concern for whether or not Neo will be able to generate more demands as we move forward this year. And also, it begs the question on the type of forward guidance Neo could provide during the earning call this Wednesday. Those are all valid near-term concerns, and that's why this most recent pullback has officially erased all previous year-to-date gains. Now, I know this sounds like this paints a fairly concerning picture, but it's not all doom and gloom. Even if in the near term, I expect the stock goes a little bit lower, I do think that we are in for a bounce shortly thereafter, and here's why. If we take a look at the technical chart, you can see that the upward momentum peaked here right before the January delivery numbers were released. We've been trending lower ever since. We've fallen below the 50-day moving average, which currently stands at $10.93. There is no catalyst specific to Neo between now and the earning call that could help lift the price of the stock. RSI is currently sitting at 32.28. This means that we're quickly approaching the oversold zone. So even though I do expect us to slide a bit more, possibly closer to $9 or just under, it's fair to expect a technical bounce shortly thereafter within the next couple of weeks. The forward guidance Neo provides during the call could be the first opportunity to drive a bit more positive price action. The fact of the matter is, while some retail investors and professional portfolio managers are selling, others are adding. Case in point, Stephen Cohen Point72 hedge funds tripled its position on Neo. If you don't know who Steve Cohen is, I'd recommend looking him up. But as I said, his hedge fund increased its position from just over 300,000 shares to a little over 926,000 to close the year. That's not a move you make unless you expect some significant upside. One other variable I look at is analyst sentiment when deciding if I should continue to hold or buy. And over the last 3 months, Neo's consensus rating is a moderate buy with 6 buy ratings, 3 hold, and still 0 sell ratings. Now, the average price target has increased to $17.13, suggesting a potential 87% upside from current level. Current expectations are for Neo to reach $28 on a high end of the range, and the low forecast comes in at $10.40. So even the low end of the range currently suggests upside for anyone buying here. That's important. Now, the reason analyst sentiment remains overwhelmingly positive is because the main fundamental drivers for downside risks have been addressed. You can check out my last video on NEO here that covers what they were. The reality is NEO continues to lay down the groundwork for more growth ahead. And here are a few examples to make my point. NEO is reportedly planning a new battery plant, which will have an annual capacity of 40 gigawatt hours. This would be sufficient to support powering about 400,000 long-range EVs. The key here is that it would allow them to build more resiliency into their supply chain and make them less dependent on outside vendors. This is a plus for profit margins. The second example, NEO's fourth plant location reportedly has been selected and will produce the Firefly sub-brand I covered in previous videos. More details could be released as early as next week's earnings call, but more than likely we'll hear about that in April. The point here is that NEO is moving forward with expanding the lineup to appeal to a broader audience, which means likely more market shares. My third example is the European expansion. As of last week, NEO has opened a new showroom. This is the second one that they've opened in Sweden. Last but certainly not least, the most recent news hitting directly at the short-term concerns of margin compression is the price cut that CATL enacted for NEO on the cost of batteries. The single most expensive item in EVs is the battery. CATL is NEO's largest battery supplier, and a reduction in this cost should be a positive for NEO's cost model going forward in 2023. Because of all these reasons and many others, the main takeaway here is that I continue to believe that NEO hasn't been this cheap in 2 years from a valuation perspective. NEO has taken the right steps to both support the long-term vision and address the near-term cost concerns, having better control over their supply chain as well as securing lower battery costs from their largest battery supplier while they ramp up their own battery manufacturing is all massively positive. So for me, this is what it all boils down to. This weakness in the share price continues to be an opportunity to further reduce my cost basis. In the past couple of weeks, I added another 100 shares at $10.07. This now brings my total share count to 1,200 with an average cost basis of $15.56. The bottom line here is this. I believe that NEO has minimal downside risk at this point. The risk reward is weighted heavily towards the upside, in my opinion. The fact that we continue to be range bound with the 50-day moving average essentially being resistance makes it easier to continue to build my position while lowering my cost basis. The closer to the $10 mark I can get my average cost basis, the more upside I'll be able to capture once the stock turns bullish. And for me, and realistically, it's not a question of if, but rather when later this year. These extra shares I'm buying are where my profit will come from without impacting my core position. So the last thing I will say is this. 2023, generally speaking, will be a choppy year for crypto and stocks. However, that doesn't mean that we're not inching our way up. These pullbacks are opportunities in my mind to further accumulate ahead of 2024. The lag effect from all the tightening the Fed has done with rate hikes will hit the US economy full on this year. Whether that drives us into a formal recession or not is to be seen. But either way, monetary policies in the US will more than likely loosen in 2024 because 1, inflation should be considerably lower by then. 2, the full effect of these rate hikes will have made its way through the economy. And 3, besides the fact that financial conditions historically will loosen during presidential election years, Powell has already communicated that they expect to start cutting rates next year. So the reason this is relevant, obviously, growth stocks like NEO and crypto benefit the most during periods of quantitative easing versus quantitative tightening. And that is the reason why NEO was able to over 20x from the pandemic lows, topping at an all-time high of $66.99 in 2021 before retracing to where we are today. I've said this before, but it's worth saying again, fortunes are built in bear markets by accumulating future winners. The market goes through cycles, and I'm definitely a patient person. So for me, not building a large enough position to fully capitalize on NEO's next rise is not an option. But on that note, that is it for me today. Remember that next week, the other two big events to pay attention to are Tesla's Investor Day on March 1st and Virgin Galactic's earning results on February 28th. If you found value in my content today, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.